Hi, my name's Charles Stewart, the Managing Partner of Market Partners, and today we're continuing on the Fund Manager series. When I think about the role of the advisor, it's to deeply understand the goals and objectives of the client, and to go away and find the best performing managers, the longest track record of outperforming their benchmarks. Today we're lucky enough to have James Rodda of Antipodes along to speak to us about his Global SMID Fund. The Global SMID Fund is actually one of the funds that we were the early allocators into, our clients were, and it just won Fund Manager of the Year. So James, welcome, and can you tell us a little bit about A, Antipodes, and B, what you've done to launch this fund?
Thanks, Charles, and thanks for the early support of the fund. So Antipodes is a global equities fund manager. We've been around for a little bit over 10 years at this point in time, and we really focus on industry research as our unique advantage, going deep sector by sector, understanding what's changing in the world, investing behind that change when it's underappreciated. So a big focus on, I guess, what's going on in the world, or even down to a micro level at a company level, being really disciplined about the price that we pay for that change.
Yeah, interesting. So, going back to what I was talking about, we're looking for fund managers with the alpha above benchmarks, alpha being outperformance above and beyond what the benchmark is actually doing. The numbers up until October, which are the only numbers I have, was 34% and 17% above the benchmark over the past 12 months. Can you talk a little bit about what's given you that alpha over the past 12 months and what's been working really well?
Yeah, look, I think our view is, unlike a lot of small mid-cap managers, we invest across all sectors. So we've had stock picking alpha in 10 out of the 11 GIC sectors, and we've identified great change, not just within AI, which is maybe where most of the better performing funds are heavily over allocated to. We've made money in financials, we've made money in real estate, we've made money in healthcare, in mining, and in telcos. And so really broad-based contribution, again, going into each sector, focusing on the change that occurs within each sector, because there is change happening everywhere, and again, investing behind that where it hasn't yet been appreciated by the market.
Can you tell us one stock specifically that's given you a huge bit of alpha over the past 12 months?
Yeah, I think one of our strongest performers has been a company called Siemens Energy. They have three core businesses. The first one makes gas turbines. The second one provides infrastructure for the grid. And we obviously know that grids are under a lot of pressure from renewables changing the way that the grid needs to be utilised. And the last one's wind turbines for particularly offshore renewable projects. And so that's had a culmination of, I guess, the research that we've said, look, on a grid perspective, we're going to need to invest a lot more, mainly due to renewables. The gas turbines are booming because of the AI boom. And on wind, it's sort of just picking up, but we think that bit's still to come. Even now, after the stock having multiplied a few fold from when we bought it, we've got a 10% cash flow yield by about 2028, which is backed by current orders. So it's a great example of being pragmatic and paying the right price, but also having a nice change story behind the investment case.
You said that it's multiplied several fold. What was the entry price and what's it at now?
Yeah, look, the stock's trading around €115, and we purchased units in the fund around 20.
Fantastic. Didn't know about that one. So going back on the advisor world, right? So we're trying to build the best-in-class portfolio where we're delivering alpha above benchmarks. When I think about your fund within a client's portfolio, think about a core position typically in a low-cost ETF for an ASX or an S&P 500, where with an S&P 500 ETF, typically you're getting your allocation to your Nvidia, your Apple, your Amazon, your Tesla. Whereas this fund in our client portfolios sits as a satellite position around that. Can you talk a little bit about how you see that working and some of the advantages of having an allocation to SMID? Even though we're getting 17% alpha above the benchmark, how does the portfolio positioning fit into that allocation alongside an S&P 500 ETF?
Yeah, I think at an asset class level, you've got very high multiples on large cap stocks. So if we look at it on a trailing basis, small mid cap benchmarks trading 17, 18 times versus that large part of the market that most investors have a lot of exposure to via ETFs or even active large cap managers trading around 33 times. And so that's a 70% difference. And if you take the long-term history, small and mid-cap stocks typically trade at a premium to large. And so people will look and say, well, the growth rates are different. They are, but the 10-year difference is under 2% per annum from a sales perspective.
Interesting. Yeah.
And so what we're extrapolating is maybe an acceleration in that. And so I think from an asset allocation perspective, small and mid caps trade inside their long-term multiples. That's not true for global large or Australian large, and I think Australian small and mid is approaching above average levels, and so we're inside our normal range, which hopefully means normal EPS and earnings growth can give you normal returns. Now, there's a couple of things on top of that can assist you with small mids. First of all, you have the potential to re-rate up towards where large caps are, if that's where markets continue to trade. And secondly, you don't have as much risk on a multiple re-rating downwards. In terms of our portfolio as well, I would say only 42% in North America is quite unique. Those ETF allocations have obviously done well, but have significant investments in the US, and so you're getting broad global diversification.
Interesting. You mentioned before that you're really research-driven. Stock selection. Can you talk a little bit about the size of the team that's behind you and Antipodes?
Yeah. So again, I think a lot of the managers in our class might be 5 people, great stock pickers picking stocks. We have an investment team of 30, and the way we structure it and the way it applies to this fund is think about it as a research platform with different teams researching different parts of the market with a real industry and sector specialisation. And so what we're looking at when we buy a stock is not just the company or what the company is doing, but we're looking around it for what's happening in the end markets, for the things that they sell, for disruptive competitors, be they listed or unlisted, venture-based, privately owned, etc. And that broader view from doing that deep industry research that you can only do with a large team, I think really reduces the risks that we make mistakes when we invest in a company.
Interesting. I think it was about 4 to 6 weeks ago you did an article in the AFR talking about the pending listing and the actively managed ETF on the ASX, quoted MIDS. One of the stocks you spoke about in there was SEMrush, which has had some interesting news come out. So 6 weeks ago you called SEMrush as one of the interesting picks. What's happened recently with that stock?
Yeah, look, that's been a great win for the fund. So SEMrush we put in as one of the picks of the year out of the fund, ahead of the listing and becoming an ETF. The strategy is now available as an ETF. And really, it was this idea that in AI, a lot of what is happening in the market is quite volatile. And so narratives are changing fast. And so companies are going from the winner bucket to the loser bucket and back and forth quite frequently. Most obvious in the large cap space would be, something that people are familiar with would be Google, which was a loser 6 or 7 months ago, and it's now up 100%. And SEMrush is really up the supply chain from Google, and we saw that as someone that had been thrown into the loser bucket incorrectly was actually an AI winner. And so, lo and behold, in the first few weeks after that article, it's been taken out by Adobe, who've bid a 80% premium to the share price to acquire that asset, and hopefully we'll seemingly see some of the positives that we saw.
Yeah, really interesting. So, from an advisor's perspective, when we're building a portfolio, as we were talking about before, S&P 500 for S&P 500 ETF for your large cap exposure, and some of the thematics running through your portfolio, I see as being very complementary to sit alongside. That is a satellite position in your fund. SEMrush is a great example, getting exposure to some of those AI and digital automation themes, which you can't necessarily get exposure to in a wide sense with an S&P 500 ETF. And so this investment sits really nicely alongside it. You listed 2 weeks ago on the ASX with their actively managed ETF. I think Market Partners did 85% of the buying on day one, so it's great to continue to support you guys. But Talk to me a little bit about what's going to change with access to an actively managed ETF for you now.
Yeah, look, I think an actively managed ETF is great from a accessibility viewpoint. So we know that global equities in general are more difficult for direct access for investor portfolios. And then if we take it down to the small and mid-cap level, we're not dealing with the Googles and the Apples and the Microsofts and the names that people are really comfortable with. So I think, greater access for clients to be able to attack the opportunity in global SMIDs where they may not be as familiar with the names, but may want to look at the opportunity and say, look, these companies are growing well, they're on fair multiples, and I do want an allocation to my portfolio. So what we've seen is advisors, particularly in the brokerage community, lean into that opportunity as something they want to explore. But until recently, there weren't really any necessarily high-performing managers available on the ASX.
Yeah, really interesting. Final question. Really appreciated the chat today. But final question, I talked about the 1 year performance numbers, 34%, 17% above your benchmarks. You must have just gone over 3 years of investment performance. What are the numbers since inception for the fund and above benchmark?
So since inception, the fund's returned around 27%, which is roughly double the benchmark return. So, pretty strong. Probably most importantly, I'd say we've done it with that trademark Antipodes sort of risk management. So the downside capture, that being, when the market has a down month, what percentage do you fall relative to the index? The downside capture has been below 50%. So we've done it in a really risk-aware way, and hopefully, it will continue.
James, thank you very much for coming along today and participating in part of the Fund Manager series. We're trying to uncover funds that deliver great returns for clients, and Antipodes Global SMID Fund has done that and will hopefully continue to do it. Thank you.
Thanks, Charles.